Welcome to Investors Insights. Our topic today is a lot to do, not much time. We're going to address what's taking place in Washington, D.C. with only 4 months left here in this year. The month of September is going to be busy. You guys have done a great job doing some research on things to look at. There's a whole list of legislation that needs to be passed, such as a bill raising the debt ceiling, spending bills to keep the government open, renewal of key programs that will expire, and then a budget resolution. And so they've got to get a lot done in September. If this uncertainty continues or if it doesn't happen, I think we all agree we'll start seeing more volatility in the market. Agreed?
Yes, definitely.
So Trey, you did some great information on that.
Yeah, this sounds like a lot like September of 2013, where in September 2013 we had the government shutdown at the end of September. We had the mid-October debt ceiling debate. We had discussions about a new Fed chair, very much like we're having right now. We had tapering talk. We had a Syria red line, very much like North Korea problem right now. And the market pulled back 4% in that September. Wow. Now they got their act together and passed stuff. We didn't default on our debt, and the market rallied through the end of the year. But this uncertainty definitely has a direct impact on the market, or has in the past.
Right, and we also discussed that historically September can be a really frustrating month for the markets.
Now you're starting to see why.
Yeah, very much so. And then Bobby, talk about just the time that's compressed here.
Yeah, so when Congress gets back to work this week, obviously, hopefully to work, they've got a lot of hotly debate going on. I mean, there's some topics that are always controversial, and the House has 12 days. The Senate has 16 days until the end of September. So, like you said, a lot to do with a little bit of time. And a lot of that budget reconciliation, and then also the debt ceiling. So those are always controversial. So hopefully they can get that figured out.
Right. And then, Ashley, you brought up from the standpoint, we've been discussing Dodd-Frank and how it's impacted banking and lending and those kind of things. But also in a previous vlog, you talked about something that's really been rough on the banking industry in terms of regulations.
That's correct. The Consumer Finance Protection Bureau, as Greg said, is a companion to Dodd-Frank. It was passed to try to help consumers. It's done anything but. It's made the whole process harder, more expensive. As much as Republicans hate that thing, it's amazing nothing's been done about it yet.
Right.
And now, in addition, the point is, in addition to all the debt ceiling debate, you've got all issues like that to deal with too.
Sure.
And not much time.
Right.
And then from a market standpoint, all these things we're listing have to be passed before they can even really get to tax reform.
Yes.
Which is the most impactful thing on the market that we're watching.
Right.
And we can see it day to day. The market rise and falls with just rumors of tax reform.
Right. So on that note, we wanted to give you a special edition here that just focused on the legislation out of Washington, D.C. and what's got to take place in the coming weeks. We'll continue to watch the markets and the impact this can have, as well as looking at the economic data as we go into a short week of the market. And then also you can continue to follow us on Facebook, Twitter, and LinkedIn, as well as those one-on-one conversations, emails that we enjoy, the dialogue, and we will keep you informed. But keep in mind, in less than 4 months, we're looking at this year being over with. It's not going to be dull, and we are looking forward to communicating with you. Thanks again. Have a great week.